SoFi tanked another 10% today, which means that it's down around 65% from its highs. One of the big reasons for that is because they spent some money and investors didn't like the way that they spent the money. Happens a lot. And I think that the knee-jerk reaction could present itself with a potential opportunity. So let's take a dive into what actually happened today with SoFi and if it actually is a buy and where would it be a buy at. And as I mentioned, it's down 65%. It's brought the market cap down, ladies and gentlemen, to a meager $8 billion in market cap. The SoFi Stadium that the Rams and the Chargers play in costs $5 billion. Just put that in perspective. That is kind of mind-blowing. So you get where I'm going here, and we're going to get into the acquisition, but like this seems like it's getting to be a bit of a joke for a stock to be trading as low as it is. Now, of course, the stock is still not reporting any kind of profit yet. So that is also something to consider and how sensitive those types of stocks are in a rising rate environment. I think we've made that pretty clear over the last several months, how those stocks might respond to any kind of rise in rates. However, they are a bank and they've been awarded a bank charter now. And now they're acquiring a company for, yes, $1.1 billion, which is no small amount of money, to make things more efficient and save them money while also making them money. So let's go ahead and dive a little bit deeper into what's going on with this acquisition of Technisys. So what is Technisys? It is a cloud-based core processing system that can support multiple financial products in one core. This is going to allow SoFi to push out products faster, also give them real-time data as data is coming in on sales, products, all that good stuff. And so the purchase here is that they plan on purchasing Technisys for $1.1 billion. It's an all-stock transaction. They develop, like I said, core banking systems. It's going to save them around $80 million between 2023 and 2025. Rather than them just leveraging the services that Technisys offers, they just decided to buy them. It's also going to bring them in another $500 to $800 million in additional revenue for up to 2025 as well. So this is going to be a long-term purchase, and some investors are skeptical of this purchase. This happens all the time. We see incredible purchases or acquisitions, and investors aren't really keen on it. They don't want to see them spending money when they're still not profitable. And there is this theory, this back and forth of growing at all costs. Does it make sense? And in my opinion, I think that this one actually does. And the reason is because it's going to create efficiencies for them that they won't have to spend money on services like this in the future because now they own the service. So I think that this is actually a really good acquisition for SoFi, even though the knee-jerk reaction isn't quite so pleasant. Let's take a look at the chart to see where there's potential opportunities for SoFi. Okay, so obviously this has been really ugly. As I said earlier, 28.26 was the all-time highs. It's down 65% thereabouts as it closed here at $10.19. As of right now, I think that there's an argument that could be made that if you tried to buy SoFi right now, you might as well be trying to catch a falling knife. But again, with a $7 to $8 billion market cap, this thing is so stupid cheap, it's ridiculous. And we've made it clear that stocks that aren't going to be reporting profits for a while are going to be the most sensitive to any kind of rising rate environment. So as the Fed continues to ramp up interest rates, it's going to affect and it's going to really kind of create a lot of pain for stocks that aren't reporting any kind of profits. However, there are exceptions to the rule. And I think that when you look at SoFi, it's just come down so much that it makes it attractive at this point. $10.19 for something like SoFi. We're talking about a stock that is now near the default price for its SPAC price. So we've seen SPACs go below that $10 default price, but for me, for a company that is thriving and growing and doing extremely well enough to be able to make $1 billion acquisition, I think that this stock actually looks like a really solid buy. We have the RSI coming down here into the low 30s, so we're approaching oversold levels. After hours, as of this recording, it is bouncing a little bit. It's up 1%. So we'll see what happens after that. We always know that low volume BS kind of happens. But I think that, you look at the way that the stock is moving, the way that it's gotten beaten down. To me, this is on discount. And if you can stomach through some of the pain and some of the volatility that we might experience through a rising rate environment when the Fed starts to raise rates, then I think that you'll be in good shape. To me, this isn't going to be some day trade or short-term trade that I think that anyone should get themselves into. If you're looking to buy up some SoFi, I would nibble a little bit at a time and wait for the real move up before I would kind of go all in, so to speak. if I were to, make the biggest purchase, it would be after it moves above the 50-day moving average, which currently sits at around 1348. Now, this is probably going to move down because as each day passes, that 50-day moving average is going to change, because it's an average, right? So it's not going to move that much. But I would say that, we start to make a move up above that 50-day moving average. And that's when you can start to make the big purchases on SoFi, in my opinion. That's when I would really start to see that momentum swing and feel a lot more confident in the direction the stock is going. But there's something to be said for making smaller purchases down here. We always talk about scaling into stocks or scaling into positions, especially if you're a long-term investor. And I think that this is a perfect long-term type of stock that I would consider investing, because this stock is going places, the company's going places, and this purchase, in my opinion, the reaction here is unwarranted. And I don't know. We always talk about how the overreaction is going to be something to definitely consider, and I think that perhaps we'll see a little bit more of a move down in the coming days. But this stock will certainly be a buy at some point. It's on discount as is. So if you can stomach some of the volatility, even if it moves a little bit down a little bit further on you after you purchase this, to me, this seems like a no-brainer on SoFi. Let me know what you guys think in the comments, though. Are you buying SoFi? Is it on your radar? Why or why not? Let me know in the comments below, guys. And as always, I'll see you tomorrow at 3:45 p.m. Eastern time to go live, give you my reactions to various amount of earnings that are going off, as well as whatever's going on in the stock market. So make sure you subscribe, hit that notification bell, and I'll see you tomorrow.